How we doing, everybody? Welcome, welcome. Let's turn the music off. We'll see what this turnout's like tonight, and we might do a little change of plan on the class. This is one that I was hoping more people would attend when I was planning all this out. Didn't quite think about Thanksgiving week, unfortunately. So we might do the change up. We'll see. Right on, right on. Yeah, and we'll see what happens. We'll just give it a few more minutes and let some people join. I'm responding to a couple DMs that I hadn't got to. Welcome, welcome everybody. How we doing? How we doing? How we doing? Hope everybody had a good day today. It's pretty slow for. I had a nice short in the morning. I had a nice short on T2, and I think I scalped short one more time, and that was all I did today.
Yeah, today was okay. Um, Tried to get on some Uber like puts, but didn't really work out. Lost on my stop loss.
This one was that the 1K alert?
Yeah, yeah. I
Dude,
was
yeah, that like I'll tell you what, like so if you don't know, 1K and I trade like the exact same, you know? So I absolutely love this trade. What made this trade not work was this. The fact that it just did nothing. You
yeah,
know, that was
it
like,
started
I
trading
mean,
sideways.
if you happen to snipe, any of these highs, you did get like a nice little trade down, But loved the trade, but it was just one. We have an interesting thing this week. We'll see what we do for this class. But we have this interesting thing this week where I think the market's closed Thursday. If it is open, it's only open short amount of time. And there'll be like no volume on Friday. If it is open Friday, I haven't even looked. I won't be trading personally. So the contracts move funny. Your one DTEs and two DTEs are actually shortened down, like if you're when you're missing those days. So oh, we got 1K in here. Dude, did you like how many times we tagged you? Dude, that was so funny. I was just sitting here giggling. At least in the beginning, I explained. I'm sure his whole trade plan is in you. Then we got on it.
Yeah, I just thought it was really funny. I was just like, man, like every time it hits that like 84 mark, it just like bounces down. So that's what I just started doing. Like, you know what I
Yep.
mean? Like as
Yep.
soon as it hit 84, it would bounce back down. So like, all right, let's sell it.
Yeah. Yeah. I should have taken that one as I'm looking at this. Those are all nice little shorts right there. Dude, that's funny. That's even dude, what I said to you is was like 1K getting all these tags about Uber and he's gonna see him and think it's at 90. There you go, Sonya. Yeah, that's because he's one of the best analysts in OT. Anybody who comes to my classes who has DM'd with me, anything like that, they know that I tell everybody to follow 1K. Like I said, he trades just like I do. So I basically always see what he's looking at. He of course does a couple things a little different than I do. Nobody ever trades the exact same, but he is definitely one of the sickest traders in here. Don't tell him I said that. But worth following without a doubt. Dude, there's so much data tomorrow. We got like all kinds of PPIs and all kinds of stuff tomorrow. So
Are we actually going to get it? Right?
yeah, we should get it. But the thing is that like at least in Raphael, at least in my opinion, it's gonna be super questionable and it will be revised, not in any, sneaky like, conspiracy theory thing. They haven't been back at work long enough for it to be too accurate. So we're supposed to get it tomorrow. I believe they're predicting the year over year up, but they're predicting the month over month down. I don't quite know about that, but we'll see what happens. I just don't know how the producers' prices could be going down in September. But we'll see what happens. But then year over year, they are saying a little tick up on it still. So we'll see what happens, or at least on the core side. And that's typically what I tend to look at. Uh, to be honest with you, it has been reindeer since last Christmas. So there's no guaranteeing that we're gonna get off the reindeer anytime soon. Okay, give me one more second. We'll make another post here. Um, yeah, jolly, grumpy, whatever. Okay, so welcome everybody. Happy to have you here, Dirty River. Uh there's 25 of you in here. I'll kind of leave it up to you guys. So there's what I was saying kind of when I first started this was I don't know how attendance is going to be tonight or anything Thanksgiving week. We all saw trade floor voice chats are all pretty empty today. And so I'll kind of leave it up to you guys. This is, we've been doing for the last month, we've been doing kind of the trading crash course. And so tonight is kind of the final big part of it where, we get to go through charts, we get to chart some charts, we get to pull up some indicators, we get to look at how we could have taken trades, how we could have planned trades for today, things like that. And then how we can plan our trades going forward. And so, I kind of want to leave it up to you guys because, like I said, this is a class that I was, hoping we'd have our normal, 40 people, 45 people, whatever we get, because it's kind of that final wrap up. So I have considered putting it off until next week. And if that's the case, we will still kind of sort of be doing that, but we'll more just be doing a charting lecture. I got no plans, so it'll have to be, it'll be up to you guys. So you'll see how I chart things. Anything you guys want charted, we'll try to, whatever, we'll have an hour if that's what you guys want to do. And we'll try to chart some things that you guys want to see. So I'm going to leave it up to you guys. Generally speaking, none of you respond when I try to ask you questions. So, like I said, slightly low attendance, so we can do the final class of the crash course, or we can do a charting. You guys have any preference? Somebody better be helpful.
I'd be down mainly for charting, but
Well, we got one charting and we got one final class. Oh, chart. Okay, charting. Oh, and these will all be recorded anyway. These will all be recorded, so don't let recording, worry. They'll always be recorded. Well, you guys are so unhelpful. There's like three of you that want charting, three of you that want class. Um,
and like
class.
quick question. Like,
Yeah.
would you be doing more classes like this in the future? Is this like it?
No, so I always do classes. I will continue to do classes, of course, no matter. Okay, yeah, we're doing classes. Yeah, we're doing the class. Enough of you said class, so we're doing class. So yeah, I will always do classes. I've been at OOT for I don't know 5 years now, 4.5 years now. I have always been, the person pushing education. Always doing one class, two class, three class, a week. Obviously, in recent times, it's all been one class a week, but for the last years, I've done tons and tons and tons of classes. And so, there will always be more classes for me. Of course, they will be repeats here and there, because we always have new people cycling in. Something that I talk a lot about with people is that uh, how when you're, and I'm not trying to say I'm a good trader or a great trader or anything like that, but something that I recommend when you're learning from somebody, make sure they're consistent and they're consistently teaching you the same things. They're consistently looking at the same things. And maybe taking some things away. That's always fine. As a person progresses with trading, everybody wants to use a million different things, fair value, gaps, blah, blah, blah. Everybody always eventually comes back to the charts, the real charts, none of the woo woo. And so if you're going to learn from somebody, make sure they are basically always teaching you the same thing. That's what you'll notice with people like me or Tilio or Shark or all of us. No matter what, if you send us a chart or an idea or anything like that, we are going to respond with, we're going to respond with basically the same type of analysis every time. So like I said, I will always be teaching. I will always continue to teach. I want people to learn here. My favorite thing is when people go start doing their own things. I know maybe that's not great for OOT's business, but my goal is for you to learn how to trade. So I will always, always, always be teaching, no matter what. But with that, let's do this last class. Let's see if we got any questions here. Oh yeah, Clandestine, he's one of those people. He's gone and done his own thing. That guy's the goat. Love that guy. Who do I go to ask questions? Well, that's a loaded question. Tilio. Though Tilio and I have not been seen as eye to eye as we used to this year. Tilio, obviously, Shark and I'll talk trades. I don't go to a lot of people. Yeah, Crash knows Vanilla Man. That's kind of he's a good buddy of mine. I won't say he's a great trader though, but he is a very, very rich trader that finds some sick trades on occasion for us. But but the internet and old people like I well, this is funny because of course in my classes are posted, they are definitely have a clickbait picture and title along with them, generally speaking. But go learn from the old people. Go learn from the people that have been in the market. Go learn from the people that have stayed in the market for a long time. My basic rule of thumb is if I want to learn from somebody, I will not click on any clickbait videos. I will not do any of that stuff. And I want them to have a lot of experience, not to say there isn't some really great traders that have started trading after 2020, but this market has been, very giving both up and down where, knowing what's going on in the market and why things are going on in the market has been slightly less important. And so I want to go learn from people that have experience. Go learn from Bollinger, go read some of the old, Dow ideas, the old Wyckoff ideas. There's another woman, Linda Rashke. She's amazing. Of course, my favorite person on the planet. Best teacher ever, best strategies ever, Al Brooks. He's as good as it gets. He is they call him the godfather of price action. The guy just knows what charts are doing. He's, for anybody who trades the hourly 20. If you got it from me, I got it from Al Brooks, So I'm always gonna go find those people who just have a lot of experience in the market. One guy that I like that's clickbaity is Peter Tuchman. They call him the Einstein of Wall Street. Big white hair. Everybody's seen him, uh, he he is a genius. He'll let his emotions get a little bit in the way on occasion, but the guy is an absolute genius. He's one of his best friends is Dan Ives. That's another guy that I think is worth listening to. But find people that just have a lot of experience. Don't find the guy that's like, I made $50,000 on my prop firm yesterday. Here's how I did it. Like, it's not like that. You want to learn from real things, real people that lived it and did it. Okay, so with that, let's see. Oh, we got a few more questions here. No, I wish I was. Yeah, definitely not ICT. Avoid that like the plague. Oh, Richard Dennis. Yeah, that's a call out. What do they call him? The Prince of the Pit or something like that. He was one of those big he was a big, cry out caller on the floors. CME, Chicago Mercantile Exchange. Yeah, he's a great one too. And he was one of the few from that time that he was able to go from the pit to the electronic side. That was where a bunch of those really, really good day traders from the 70s and 80s, where everything was, you see them. We've all, everybody's seen the videos, shaking papers, screaming on the floors, from those days. A lot of those guys never made it once computers started happening, and that's why, Florida exchanges are for the most part empty these days. Few brokers left. Peter Tuchman, one of them, longest standing broker left. But yeah, learn from the old people, and again, like ask me questions, use the people in here that we have, that we have at our disposal. You want to really start learning about some trading, go talk to Tilio, go talk to Shark, go talk to 1K, talk to these people who look at charts and understand charts and have these very proven methods that work. And ask them questions and say, like not everybody's going to be able to trade exactly the same, but learn what they're teaching and learn what they have to offer, and Shark Tilio, all those guys are super, super nice. 1K super nice. Always happy to answer DMs. As long as you want to take it serious, we're the type of people that we can very, very quickly tell, are you a waste of my time or not? And if we feel like you aren't a waste of our time, then we will very, very happily help you. Okay, so with that, too much yapping for me. What's good? Oh, we got a couple things. Uh, I don't know. We can DM about that always, but I mean, if you're gonna go trade some micros or whatever, sure. But I wouldn't recommend doing it through a prop firm. Just luck, Manny. We're just chucking the die, and it's working for us. That's it. Okay, so with that, welcome again. Sorry, a little bit of yapping there early. Welcome, welcome, everybody. Happy to have you here, Dirty River. Tonight we are going to be talking building a trade plan. And this is what trading is all about. Um, there is, so there we actually had this guy in here one time and he said about the stupidest thing I've ever heard. He said, I would rather be right than green. And so I think that's about the dumbest mindset you could ever have because what this guy would do is he traded futures, he would get within a point of his profit target. He might be up 50, 60 points. If it doesn't hit his profit target, he'll let that thing go red. He'll let that thing go all the way back to his stop loss because his theory on it was you want to be right more than you want to be green. So terrible logic. However, I will say that when you are trading and when you start to trade and when you build a trade plan and that trade plan works and you are right, it is the best feeling in the world. Don't get me wrong. I'm not saying, whatever, we got Uber up, say our target is 84.30, 84.26, 27, you're there. It's not about this hitting it to the penny. Nobody care. Like nobody cares. You shouldn't care. Nobody should care. You should say, I developed this plan based on these things and it worked. And so to me, that is where trading is extremely rewarding. For me, you guys know, for anybody who's traded with me in voice chat or anything, you guys know that I scalp a lot. I scalp because I like it. Because in scalping, you're sneaking money out of the market. I talk about this a lot that, nobody should scalp. None of you guys should scalp. None of you should focus on scalping. If you want to scalp with me in voice chat and you want to learn how to do it because it's fun, then great. I scalp because it's fun. It's fun to say, okay, the market should make a little move right here based on this, this, and this. So maybe I'm going to trade against the market, or maybe I'm going to buy this dip, or maybe I'm going to do whatever I want to do. The thing about a scalp and how I teach scalping and what's important with scalping is you need to be right or wrong instantly. So when you're a person like myself that is, some instant gratification is always nice. That's why I scalp. It's fun to say, hey, the market should reverse here or bounce here or whatever it is, and you take that trade and it works for you. It feels good to be right. And when you're scalping, it's fun because oftentimes it's taking you minutes, and you get a say for that just, for those 2, 3, 4 minutes that the candle went in your direction, 10 minutes, whatever it is, you get to say, oh man, I knew what the computers were thinking, because none of this is people. This is all algos, and for that little brief second, we get to say, hey, we were correct. And so that is what trading is all about. Trading is all about building your plan, following your plan, and the great thing about it, there is two outcomes. That's it. There is nothing else that can happen. You are right or you are wrong. And so that's one of the really, big benefits that I see in trading and that I wish more people would focus on building these trade plans and how could we trade around them? What are some things that we could look for? And what I said in my post and what I think is the most important part of building a trade plan is analyzing your risk reward. And I'm not telling you to be these people that are like, oh, I have one risk, 1.79 reward on average. I don't care about any of that, especially because we are options traders. So, due to fighting Greeks, we don't have this super cut and dry risk reward of, say, some of the futures commodities guys, we don't have that cut and dryness, especially on same days, things like that. We're fighting Greeks. So what we're going to do tonight is, and how I want to show you how to build a trade plan is we are going to pull up a chart and we're going to chart it. That's what we've been talking about in all of this, in all of our classes lately. And so we're going to do some support and resistance. We're going to analyze our long time frames. We're going to identify where we're trading in the markets, kind of show how to build a bias from those daily time frames. And then we're going to be able to, go dive in to the market and see how could we have entered? How could we use, you guys know I use very few indicators, a couple SMAs on the daily every once in a while. I'm substantially more concerned personally with, big support and resistance levels, big trend lines on the daily. And then on our shorter time frames, we're gonna, as I taught, we're gonna be looking at our hourly 20, we're gonna be looking at our VWAP, and we're gonna be looking at our 50 EMA. Just a few simple little indicators. I truly believe that's all people need. And so the stock that we're gonna look at tonight, and how we're gonna build a trade plan. I would normally do SPY, but as funny as this is, I'm trying to get people off that. So we're going to talk about NVIDIA. NVIDIA is another one that people love to trade. We're going to go to, yeah, we'll just go to this one. We're going to go to here. We're going to go to our blank chart. NVIDIA is one, as I said, people love to trade it. It is a fun trader. It's expensive, a little bit expensive, nice and volatile, can provide some very good trades. And I'm going to show you how I would have traded NVIDIA over the last couple days. And so, like I said, all we're going to do is we're basically just going to go through everything that we have learned in our last couple of classes. 3, 4 classes, whatever it is, and just I'll show you how I would have traded it and what I would have done, where I would have taken stops, where I would have taken entries, things like that. Scalps, day trades, and swings, kind of all of it throughout. So give me 1 second and we will get to it. Okay, so NVIDIA, we got it pulled up on the daily. I'll keep my eyes on the chat, so if anybody has questions. So NVIDIA on the daily, obviously we don't care about anything but right here. We know, NVIDIA has done, don't get me wrong, it has gone up, but for the most part, NVIDIA has done nothing in the last, 3, 4 months, something like that. It's, slow grind up, but as a whole, mostly sideways. So we always we want to identify our major lows, and then we always want to identify our major highs. So we see big major highs right here. Honestly, I even like this, you guys know. So when I teach trading, this is what I look for. I want to find these kinds of things. So then again, we can slap all of our major highs on here. We'll just go up, big old double top, nice little zone up here. Go down, mark some more of our major lows down here. And so this is all we need on NVIDIA on the daily time frame. Next thing that I'm going to do, we have our daily levels right here. Actually, I'm not gonna lie. I want to slap one more on here. I like that. It's basically 180, makes sense. So then the last thing we want to do on the daily time frame is we want to get a trend on there just to see where the trend is, and we want to look at our SMAs. So SMAs right here, 2050, well below them, been holding below them as well. Funny enough, Nvidia did its classic, you know, nice move on ER to just instantly dump it down. Generally speaking, we don't see a whole lot. Generally speaking, we don't see a whole lot on the earnings. This is actually a very dramatic earnings day for it. Generally speaking, you're best off just waiting. So then we have our nice little daily trend right here. So we know, other than that day, we know that we kind of want to be looking short on Nvidia, and we have wanted to look short on Nvidia. And so, like I said, we just have a few daily levels right here. So we know when we look at this chart, there's very, very, very cut and dry places that we want to start to look long. So our favorite longs are going to be down here 173. And why do we say that? Because of big level over here back in July, big level over here end of July, big level in August, big level in September. We know that this one's even all the way down to 170, but 173 is major, so we know where we want to look to be a buyer. Now we've spent a little bit of time above this 184.50, 185.30 zone. But look at this on the chart. I mean, we get clobbered off of it. We try to break above it, we get right back below it. We try to explode above it and then ultimately sell right back off. And so now we are back below it. So from this chart, we know that for the most part, as long as we're downtrending, blah, 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 we want to be looking short as a whole on NVIDIA. We also know that the absolute worst place that you could long this is going to basically be this 184.50, 185.50. I do want to do my normal disclaimer with support and resistance. Sometimes you're going to hammer it to the cent. More often than not, you're going to be plus or minus 5, 10 cents, on something maybe like a Microsoft, you might be up by like a buck. But you're going to be in the zone. And um, what's important for support and resistance is not being that greedy guy that I told you about. Say you want to buy 173.17. Well, maybe you buy 173.50. Maybe you let it poke a little bit below it and you buy 173. So with our support and resistance, we want to use it as a guideline, but not this set in stone thing. So again, trend is down. We know our 185 zone is going to be that big breakdown point. That's what we want to have our eyes on. That is where we want to be short. We also know 173, and we know this because again, we looked left, is going to be our big dip buy zone. So let's see. Isn't this level of current support though? I don't know where we are. You mean like right now, 182.55? Not to me. 180. Yeah, so I mean 180 is, yeah, 180 is. So we're going to talk about it. So like I said, we've built our bias. We can pretend these days didn't happen. And that's in fact what we are going to do. All of our charting is from previously. You'll hear me say, you'll hear 1K, you'll hear all of the good traders in here say it. If you want to know what a chart is going to do to the right, you look to the left and you say, what has it done before? So again, we know our 185 is a short. We know our 173 is a buy. Any of these major levels in between, our daily levels in between are to be traded around, but we know where the big stuff is, 173, 164, 185. You could just run those levels, but we need a little bit more between them. So what we're going to do is we're going to go back and we're going to so here's earnings day. We're going to pull up our normal indicators. And so how I like to try to do this is, so we go back, let's see, where's our earnings day? So we go back. And so how I like to show you our building a trade plan, is that we just kind of go through the charts and we sort of go through it candle by candle and we understand our risks, we understand our rewards, and we trade around it. So again, I just want to show you guys the whole, on our daily time frame. We have all of our levels. So remember, all of our levels are from previous. And so when I look at a chart, you guys know I taught you, we talked a little bit about it in our last class. We assume levels are not going to break. And so we want to trade those levels accordingly. If we're selling down into a daily level, we want to try to buy the dip there. If we are buying up into a daily level, we want to short the rip there. I'm not telling you just, every single time you're hitting daily levels, take trades off of them, but that's what our bias is. We also know trend is overall down on NVIDIA for now. So what we're going to do is we're just going to come back to our 5 minute time frame, like most of us trade on throughout the day. Obviously, it's going to look a little bit funny. Here's our big old earnings move. So, part of me wanting to talk about Nvidia is because people are obsessed after earnings moves. So we have very, very cut and dry levels on this chart. You can see even in the after hours on the earnings moves, they were working for us. So we know these levels matter going into the next day. And how can we start to build trade plans around it? So, like I said, any dips into these levels, we want to try to be dip buyers unless selling pressure is huge or buying pressure is huge. And then when we get below them, ideally, we are going to track to the next level. This should be your ultimate goal. So what I try to look for is when we're going into the next day, we know our levels. We start losing this 196 zone. We want to be short down to 191. If we're holding this 196 zone, we want to try to catch these bounces, at least to pre-market high. As we go into the beginning of the day, breaks and retests. We break the 196, we can short the retest. We, bounce here and retest it. We can long the retest here. So that's how we trade. So again, we just go into the day. Obviously, right off the bat, we get a nice sell down and we get a bounce to our level. So we are now instantly being provided a trade a few candles into the day. So how do we, and we said, we knew this ahead of time, a bounce into this 195, 196 zone is going to be a short. So we do have to analyze this a little bit and we have to say what is going to be our absolute, our actual risk. So we're going to call it 196 for ease is where we're going to enter just so I can teach you guys a little bit about risk reward math. So our high of day over here or pre-market high after this earnings is 190. Oh, actually that's convenient. 198.60. We know our break and retest of 195.60 is our entry. Because we're looking for more of a day trade potential swing trade, we have to kind of analyze our risk reward. So we have about a $5, $5.50 move down, and we are risking about $3 to the upside. So what do I mean by that? When we're discussing our risk, we can analyze this trade. Worst case scenario, this is going to be kind of our oh no stop. So when I teach about stop losses and when I teach about building trade plans, I want you to have two stop losses in mind. One of them, I jokingly but seriously refer to as the oh shit stop. It is where the trade has gone so far against you. You don't care, you never care about percentage, never care about dollar amount, never care about any of that. Care about what the chart tells. And so your oh shit stop is going to be above 198.60. If we start getting over that thing, you were wrong. It's moved a few bucks against you. You need to exit the trade. Our plan, our perceived real stop is going to be a break back above 195.66 and a hold there. How we're looking for a break and a retest here, if we get a break and a retest back over it, we want to be out of this trade. So really, we have about a buck's risk. If we're breaking and holding back above 196, we got about a buck risk. Best case scenario, like I said, about $5 down, $4 to $5 down. So we have a nice, one big risk to potential to reward downside. It's a great trade. With the tighter stop, obviously the risk reward gets much higher, and we start looking for a move down. So now we know where our entry is. Now we start to look at our indicators. Okay, we broke below the level. We have the 50 EMA trending down. We are breaking and retesting the 50 EMA. So now we need to think about, we have our final target, our 191.37, but what are our mid-range targets going to be? This is where our indicators come into play. And obviously we dumped hard, dump this thing straight to our VWAP hourly 20 combo. We know this is our first trim, no questions asked. Our next trim, low of day. Always let the chart tell you what to do. It's a buck above our final target, but always let the chart tell you what to do. So we get our break, we get our retest. We have our 50 EMA trending down. We also have our VWAP trending down. We also have our hourly 20 moving down. So we know the momentum is starting to point down. We get the reasonable short entry right here, risking $1 to $3 to the upside, looking for $4, $5 to the downside. We get our trim. And we know all of this. We don't even need these candles on the side. This plan is made here. This is what we know. We know this plan is made here. So we look for our move and we get in here. And now this is where, being a scalper can punish you or hurt you. What happens on this candle? Does everybody see right here? We hit our target. So at this point, you exit the trade. In my opinion, you exit the trade. You got the exact move that you were looking for. So at this point, you exit the trade. You now have a couple choices. Obviously, NVIDIA is showing us some pretty serious downside momentum, down $5 on the day or whatever it is at this point. So maybe we don't want to buy the bounce. However, what I always teach people in a trade, doesn't matter what the trade is, you need to look at both sides of this trade. So we know 191.37 is a big level. We know that it was big in the pre-market. We know that it was big on the daily time frame, a few months ago. So we can look for a hold of this level to catch a bounce because we know buyers have showed up here in the past. There is a chance they will show up here again. But we got our move. 1K mentioned this earlier. I talk about it all the time. You need to have reasonable price targets. You have to realize, when NVIDIA moves $4, that's $100 billion. I'm making that number up. Feel free to double check me, but that's $100 billion in market cap. Don't be the person who sees 196 break down and say, oh, we're going to 175 because everybody will make fun of you. Might we go to 175? Sure, but don't be that person because our daily time frames tell us there's a lot more in there. So we've looked at our bullish case. We can say, 191.37, buyers have showed up here before, strong earnings, blah, blah, blah. Let's see if we can get some bounces and a hold. However, if this breaks down, we can look for the break and retest for a short with a tight stop. So we know this was the previous low of day. If we get the breakdown here, we get the retest here, 191.37, we reclaim that previous low of day, we know that the market is likely going to keep going up. So we have about $1 risk. Now you can see we have a very large gap here. It's not a gap like you see, a gap on a daily chart or anything like that. We just have a low at 191 and the next one's at 185. So you can look for this move. However, as we just discussed, this is a very large move, $6, $7 move, whatever it is on NVIDIA, hundreds of billions of dollars. We need to always look left on the chart and say, how have we behaved around here before? So we're going to come back a couple of days and we're going to say, oh, 189 was big. The next big one was going to be this 187.80 to, 188 to 187. So we know 189 and we'll call it 187, are going to be our real main targets. So we go back forward, we go to our day. We have exited our short trade. Oh, sick. Look at what happens. We have exited our short trade. We are looking for a break and a retest to short the 191.37, or we're looking for consolidation to catch the bounce back upside. And that's it. Those are the only things that allow us to enter this trade. Well, it breaks and it waterfalls. To me, we have no entry here. Were our targets that we would have been looking for met? Absolutely. However, we got no entry. We didn't get consolidation for a bounce. We didn't get a break and retest of our 191.37 to short. So I sit this out because I did not have a plan for this trade. So now, if we still want to keep trading NVIDIA, we start looking here again. Okay, we know 184.40 to 185.30 lines up with the daily trend. This is where we want to look for a bounce, or if the bounce doesn't come, again, break and retest for short. So we let the market work. We get some consolidation. We start breaking down, breaking down. So we keep on watching. This is likely going to be our entry. And we use again the charts. We know our 184.47, 185, 30, whatever this is, very, very, very big level on the chart. So we get short somewhere in here. We'll call it 185. Where is our stop? Above the previous candles. We have $1 risk. Where are we targeting? Previous low of day. Previous low of day. So 185, very first target, previous low of day. Let the chart tell you what to do. So here's your first trim. Stops are now in profit. So again, we let NVIDIA keep working. We know our best case scenario, 179.76. If we can break and hold below this previous low of day, that's what we are looking for. Our stops are up here. And we're already green. For me, I'm basically gonna have my stop at break even at this point because you got a $2-3 flush, you're happy, But that's where our stop lies. And we know where is our next target? This major one down here. This is getting a little more into price action. Maybe we could start to, obviously you short 185, you get down to 182. You start to look to trim some more. I mean, we're trying to break this, but not having much strength. Because Lucas, we know where it wants to, we know, or we don't know. Let me rephrase that. We know where we want it to bounce. As I said in the very beginning of this lecture, a trade plan goes one of two ways. You are right or you're wrong. We shorted this bounce and we made money. This bounce just as easily could have bounced, and we got stopped out. All that matters is following the plan. You don't know if it's just going to keep dumping. Obviously, the momentum was just insane on it. I think this was even the day the market was just getting obliterated, But we know 179, our stops are up here. We'll call it 185, stops at break even, I'm stopped out. No pain whatsoever. Well, we still have our same trade plan. We can get some consolidation holding this level. Great. If we can get another break and retest of, to long it off of the trend, off of our major daily area, great. If we break back down and get another break and retest, we can target right back at these lows. So we let the market work. We tried to break the trend. We're getting back below that trend. So our eyes are on this now. Now, maybe we missed this first entry. I'd short this. We're stuck below it. We can call it the 185 entry again. Stops above the highs up here, 186, targeting 182. So we got a buck risk for $4 down. Maybe we get stopped out, or maybe we get that sell. Here is our target. All we want to see is consolidation. Consolidation leads to breakouts. So we get break and retest, we can reshort that thing. We get a consolidation that's not able to get back over these levels, we short it with stops above. You can't get sucked into one candle. One candle's not telling you anything. You want to see multiple candles forming in this area. So right here, we made it down to 180, 150. We were 75 cents from our final target. You got to be mostly out of the trade, and then you let it keep on working. Your stops are, obviously should be well above entry by this point. Oops, wrong way. Look at that. And it gives you your beautiful retest right there, or your test right there, and you're out of this trade. So that's it. That's what you do every single day. We're going to do it again on this next day, and I'm just going to show you exactly what exactly what I would have been looking for. So again, we have our lower targets, we have our upper targets. We know our 184.47, 185.30 is big. That's where we want to be short. If we can get a bounce up to there, that's where we want to look to be short. And then we, again, just work down our levels or look for bounces off of our levels. So again, we come into today, honestly, no real entry until, and you could take these, but I'm just going to reiterate, we know 173 on our daily time frame. That is where we want the bounce. Could you have taken this little bounce here? Absolutely. No real entry here. This one gave you a nice little break and retest. If we just want to use our indicators, short our 179.76 retest, stops over the hourly 20, no big deal. Looking for 176, and if you're lucky, 173. However, as we start getting lower and lower, and I guess I should just show you this because you asked about, it's run so much. How do we know? Well, you want to see it finding itself at major support. And where is our major support? Because it's always going to want to sell to somewhere major on the chart or go buy to somewhere major on the chart. Well, to us, it's 173.17. So we go back to our charts and we go to our 173.17 and we are looking for a hold here. We got our pre-market low here. I'm not a big pre-market low trader, but this is really the zone where I would be looking for the dip by 173.17. Pre-market low. So we keep watching. It rips. I would hammer it. I know most others wouldn't, and that's perfectly reasonable. Now that this candle has bounced, don't chase the high. Look for a pullback to 174, 173.17, anywhere in that zone to buy. Maybe you get it, maybe you don't, but you do. Here's your pullback, lines up nice with pre-market low. So we know we bounced where we wanted. We've consolidated a little bit above it. We know where we want to buy the dip. So we knew all this ahead of time. We're buying at 174. Our stops are under low of day. We're looking for first target 176.72. Above there are EMAs. Above that are 179.76. So there's our first trim. Goes into our VWAP. Moves up to our final target. And we know still, we get up to this 185. We know this thing's huge. We short this. We short this trend. We are looking short from 182 to 185. So again, if you're still long, sick, you're at your hourly 20, you're posting into your short targets. So you obviously really want to be taking this trade off. Starting to get up there. So now we start looking. Are we going to break this? Are we going to reject this? What are we going to do? Regardless, we know risk reward favors the shorts. We want to be short in this range. We look left, our stop is 186. So we want to short somewhere up here. Maybe you take this first short, maybe you look for, a double top or something to set up. That's what I personally try to do. There's our double top at our 184.50. So we have our double top set, which you guys know it's one of the few patterns I trade. Our double top is now set. So we short our 184.50. Our stops are over 186. So we got about $1.50's risk. First target trend. We've been riding this trend, $2 down. So you're short of one risk, two reward trade, but that's your first target. Very next target, it's going to be your hourly 20. This is where your indicators come into play. Kind of these highs, kind of around here, your 181 zone. So you short your double top at your extremely important zone. Look for trend. Look for hourly 20, 50 EMA. Under here, we're going to look for VWAP to 179.76. Or consolidation there to exit the trade. Doesn't really matter. But There's our 179.76. So we take our trim. Oh yeah, I got crushed into close. And then realistically, look, you caught a what, a $6 move down? Now you stop out of this trade. Going in, the no reason to swing a trade like this. So now we go into the next day. We're looking for again dips 173, 176 zone to buy. Shorts up here at our 185 zone. So I don't actually know, of course, what's going to happen here, but we know our plan. We're dip buyers on these levels with tight stops. We're short rippers up here, no problems. So, oh, well, right off the bat, we know big levels, 176.72. We're looking for a dip to it with some consolidation to buy. We don't get no consolidation. You could risk the buy on it, looking for the move back to 179.76. Tight stop kind of under these yesterday consolidation points. So you got about $1 risk, $3 up, something like that. I probably wouldn't have taken this trade, obviously 5 minutes into the day or whatever on a knife down. So again, trend rejects, EMA rejects, any of those things we're looking for. Dips to our 176 we're looking, break and retest looking to short. We don't care. We just build the plan. And so got our dips, set higher lows all morning, relatively reasonable dip buy. So only real trade that I see here is going to be an opening range. We discussed that. Opening range breakout, break above trend, breaking above, this important consolidation from yesterday. You can be a dip buyer here, still looking for your 184.40, 185.30. I haven't really seen a trade that I like here. I mean, our intraday trend could have been buying these dips, but I don't really see a trade that I like here. Little weird consolidation, not by my levels. So we don't do anything. We'll short our 184s, to 185.30s. It's been printing for us. Every trade that we would have looked for would have paid us. No trade. And then obviously that was today. Yeah. So today, NVIDIA would have really provided me no trade unless I would have hit this 176. Obviously, you could have tried to short little double top here, made a couple of bucks. But we just weren't getting consolidations at our levels. We weren't getting, we weren't provided entries. That's it. We weren't provided entries. All we care about is, are we getting breaks and retests? Are we getting consolidations at our level? We know, obviously, major trend is down. So we're feeling more comfortable shorting bounces than we are buying dips. But we also know you don't want to be the big shorter down here. You don't want to keep chasing the downside move when we come to major levels. It's the same as when we come to these major levels and we really start pushing up. You don't want to be the one chasing the big upside move. If you're getting breaks and retests and consolidations, EMAs pointed in the right direction, blah, 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 you can, of course, try it. But NVIDIA is, funny enough, it's a range trader. Like, it will spend massive amounts of time in relatively big ranges before breakouts ever come. So as we start to push highs, you want to start looking short. As we start to push lows, that's where you want to start looking long. So that's building a trade plan. Any questions? We got about 8 minutes left. Let's see if I missed anything. I got no idea what green candle you're talking about being support, but one candle will almost never convince me of anything. Oh yeah, and then Lucas, we talked about that. You don't know. You don't know if things are going to keep dumping or keep ripping. All we can do is know the points where we want to be. And I should have said this in the very beginning. So when you're building a trade plan, technically speaking, there's three components. You need to know, where do I want to enter? You need to know, where do I want to stop out? And you need to know, where do I want to take profit? In that order. That is the order of importance. Entry above everything. Stop out, the second most important thing. You don't know how much money you're risking if you don't know where you're stopping out, which means you are gambling. Take profit. Those ones are, it's important because you need to know where you should be trimming. But you start getting green, start bumping those stops up. It's that simple. The ones that you need to manage are entry, stop out, take profit. Then what I always teach is anything that happens, you enter. Anything that happens between stop out and take profit is noise. None of it matters. Until your plan works or does not work, you do nothing. We're going to use 1K as the example today. Guy got tagged 20 times about his trade. Not only is his entire trade plan laid out perfectly in his tab, um, look at the chart. The chart has not told you to stop out. The chart has not told you to take profit. So, I mean, sure, you can take break evens if you don't want to get chopped up, but you follow the plan. That is all that matters. Raul, no, I basically will never look to buy a rip or, or short a dip. But all I care about is what the chart tells me. Like, don't get me wrong. When we look at Nvidia and Nvidia has sold 196 and we're already down to 184, yeah, are you gonna feel a little bit cautious shorting here because the most valuable company on the planet is already down? I mean, I don't know what that is. The most valuable company on the planet is already down 6% intraday. Yes, you should feel some caution there. However, you got to let the charts tell you what to do. Do I think that Nvidia should have sold 8% top to bottom in a single day? Probably not. But the one thing I can guarantee you, the market does not give a shit what I think. Like, not even remotely. So I might think like, hey, that's a little excessive on the back of pretty good earnings in a company that just made $50 billion in 3 months, But the chart tells us short. And so we short. It's that, that's all we can do. And then if we get down to the next level, we look for consolidation and we look to buy the dip. But all we're doing is going from point A to point B. And we can get a lot more detailed in this, of course. This is the crash course. This is me trying to teach you guys a lot of what I do in 4 weeks. So it's just super unrealistic. But take these basics, practice them every single day, and you'll get there. Zoom user, really great question. A lot of it, a lot of it is for the most part, people have too many levels. You guys can see here, this chart like might look a little bit crowded, but you have to think 164 to 220 and we got 10 levels or something like that. It is very easy to start marking all of these, oh, well, we have, and I like a little consolidation. You can see even here's like, this is a pretty reasonable level, 182.50. It's basically where we stopped today. Uh, you can have those, but if you really focus on your major highs, your major lows, big bounce points, and you sit and you patiently wait for those to show up, that is where you can really start making money. Something that I like to teach people is, we as retail traders have a truly uncanny ability to buy where we should be selling, like at the top of a big green candle trying to buy calls, or sell where we should be buying, which means stopping out at support. People have a very, very good job of longing resistance and shorting support. What I teach people is for your entry, you want it as close to your stop out point as you can get. Because you will dramatically reduce risk and dramatically increase reward. So the best thing you can do is less levels and wait for those major ones to show up. And you can see, I mean, like we said today here, could you have bought this one off of this major level? We knew that we'd taken big bounces there before. We knew it was going to be a major level for us. Can you take the risk? Absolutely. But not everybody's comfortable doing that. So you can see our daily levels gave us moves just like we would want them to. They just didn't provide a trade today. No big deal. So less levels and patiently wait for them to show up. Yeah, Billy, man, there's like, I mean, I probably have like 200 recorded lectures in here. Highly recommend, my lectures, Toasty lectures, 1K lectures, without a doubt. Love them all. Love the 1K charting lectures. I wish those things should be packed. If nothing else, you get to see a real trader sit there and chart and do what we did tonight, build plans. So I highly recommend all of those, I highly recommend all of those 1K lectures in a big, big way. So you're exactly right. There is no perfect entry. All we care about is the best entry we can get. And I love double tops and double bottoms. So like this to me right here, I will short this. Like I will short this 90% of the time. There's just so little risk. Like I'm risking less than $1 of upside for multiple dollars back down to even just the low of the range. You give me double tops at or double bottoms at major daily levels. That's it for me. That is the perfect trade. Second to that is going to be a double top or double bottom that runs into a higher high, higher low, whatever it might be. Let me see if I can identify one. Okay, so um, let's see. I don't really see a good one right here. I mean, honestly, ah man, I don't know if we got a good one on Spy. I swear there was a good one the other day. Well, I don't see one right now. But you show me double bottom or double top into higher, 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 low. I take that trade every single time. Like that is my, oh, actually, this is a pretty sick one. You know, as always, not everything's perfect. Here's your double bottom. Here's your higher high. So I look for the double bottom to set up. Look at this one was actually sick. I wonder what day this was. This one was actually sick. So you get trend bounce, you get double bottom. These are all higher low, or sorry, I've been saying higher high. These are all higher lows right here. Here is your another higher low off of the double bottom. Here is your entry, stops under these lows. You're looking for VWAP, then you're looking for hourly 20. I think we're actually in this trade. Whenever this was. I kind of remember this trade last week. So oh yeah, I actually do remember this trade from last week. So not to mention you're a big 650 or 51, you got 650 below, you get your double bottom set, you pull back. Here's your entry. Let's call it 652, whatever it is. Stops under 651. You got $1 of risk. You're looking for $2 to VWAP, $4 to hourly 20. This is my favorite trade in the market. Not just on the 5 minute. Look for it on the 15, look for it hourly, look for it daily. This is like if you sit around and you wait for double tops and double bottoms to show up, and then you short the following lower high, higher high, whatever it might be. That's it. Indicators, I got 50 EMA right here. Stair steppy one is actually the 20 EMA, but on the hourly. So this is the hourly 20 shown on the 5 minute. And then this other one is VWAP. The ribbon is based on the hourly 20 and VWAP. So when VWAP is below it, the hourly 20, it's red. When it's above it, it's green.
Hey, River.
Yep. How's it
Hey,
going?
good. How are you?
Doing good. Doing good. Thank you.
So, going back to the double bottom, sorry.
This one?
Yeah, I guess like the question is like entry wise, which candle would you have entered and like do you wait for candles to close? Like after you got the double top, sure, we're waiting for the pullback. Would it be that red one or would it
So
be
when you are, if the double top or double bottom is and so I'm going to reemphasize this. I hate patterns. I hate bull flags, bear flags. I hate all of that. Double top and double bottom are the only patterns that I truly approve of them being part of somebody's plan. Where a double top or double bottom carries risk, the best entry is buying it when it's forming. It is also the riskiest entry. So while I like this double bottom, like I said, I would buy this. I also know, based on market statistics, markets do not like to set new lows or new highs. So, and I assume most breakdowns are going to fail. So I know that when I'm buying this double bottom, my stop is under this trend and it's under here. So my risk is going to be a little bit higher. That's whatever it is, $1.50, $2 stop, something like that. My risk is going to be a little bit higher. If I wait for the higher low to form, like this one, My stop is just, and I'm going to hard stop it under these candles because if we're going to break it and the double bottom doesn't hold, the trend doesn't hold, we're stopping out below there. That's all there is to it. So you're actually reducing your risk by waiting. And really, if I buy this double bottom, we get the nice bounce and this pullback happens, there's a very good chance on the same day I'm break even right here. So your entry is going to wind up being very, very close to mine anyway. But with a double bottom, you buy the double bottom. With the double top, you short the double top when it forms, you know. You can look at this as a reversal candle. I do look at it as a reversal candle, and you can risk the buys, you know, around here. Al Brooks would recommend it. I wouldn't, because I want to pull back. If you're a futures trader and you have that more defined risk reward, even though that's about 10 points, you know, you have the more defined risk reward, maybe okay. But we as options traders benefit greatly by buying dips and shorting rips. If we buy calls on a red candle, they are cheaper than when we buy them on a green candle. So it's part of the plan. But on a double bottom, you buy it. You know, yeah, you buy it when it double bottoms. And sometimes, you know, maybe you're waiting for the double bottom at 650.81 and this guy only gets down to 651.08. You know, that's where, you know, it's not always going to be to the cent. That's what I was talking about earlier today. It's not always going to be to the cent. So when you're seeing this nice pullback and you're saying to yourself, okay, is this going to be a double bottom? You guys know I look at the whole market. I'm not really just going to be using SPY. You know, I was kind of trying to avoid SPY today so that we can mostly focus on individual names. But I can almost guarantee you that at this point in the market, if we go look at some, well, okay, so Apple was, we can go look at these other names. So obviously, Apple was nice and strong. Then we go to our Microsoft. This is what I like to look. Big old rippers setting higher lows. We're feeling good about that. Nvidia, well, was obviously getting wrecked, bouncing out. Oh, Nvidia was actually double bottoming that ultimately broke down, funny enough. And then Amazon, we knew, oh yeah, double bottoming on Amazon. So when a double bottom is setting up on SPY, it doesn't have to be, but it is almost always going to be setting up on some of the big names as well. So that's our additional confirmation. Whereas on something like Amazon, we can just trade this double bottom. No big deal. You know, here's the double bottom. You're sweating it for a little bit. Ultimately, you're super happy in the long run. But you buy your double bottom, and I mean, those are nice bounces to trim, but you buy your double bottom, and that's what you do. Well, it depends what you're trading, but you probably need more than 4 major levels, you know? You got to figure that, you know, on most of these big names, every buck or two, you have something somewhere. So Luis, great question there. So we're getting advanced. I like things like this. I like candles that are showing me somebody showing up. I of course will buy an ugly candle at a strong support, but this is a really, really great example of double bottom sets, reversal candle forms, we pull back, still staying within it. This is what, I mean, Al Brooks might call this a signal candle, things like that. There's something that is telling you buyers are showing up. You know, you want to see something like that. Maybe you're looking for a short, you know, up here. You know, maybe you're looking for a short up here. This consolidation is what you want to see. And you know you want to be short at the highs of consolidation and long at the lows of consolidation. So if you're short at this 661, this is the kind of action you want to see. I mean, well, you want to see just crater like this, obviously, but you want to see the buyers just not able to win. Double tops and double bottoms are kind of the time where you get in when the getting's good. But for the most part, you heard me every single thing we talked about on all of those NVIDIA trades, breaks and retests and consolidation. We want to see some of those. Those are where your confirmation is coming from. You know, a break and a retest is, you know, basically a double top or a double bottom, you know, or consolidation. Consolidation leads to breakouts or breakdowns. You know, the market only does two things. It trends and it consolidates. So without consolidations, we cannot see trends. So we want to see consolidation. This movement right here We don't care about this in the market. This means nothing to us. If we aren't long, we are done looking at Nvidia or SPY, whatever we're looking at. When this is going on, don't trade, don't chase, don't do anything here. Consolidation starts forming. Okay, we're consolidating. I know where I'm entering. 661. Stops are over 662. That's it. Cut and dry. First target, low consolidation. Next target is going to be your previous little breakout. That's how we treat everything. Zoom user, daily time frame, as far as you need to go. Let me think of a good one. Pfizer. These Pfizer levels that we're trading right now are from 2012 was the last time Pfizer was trading down here. So you go as far back as you need to go back to find areas of interest. Yep, no problem. When resistance flips to support, you're looking for a break and a retest. So it's simple. Here is resistance. You're pushing up into it, you're rejecting it, you're pushing back up into it, you're still rejecting it, and then finally, boom. But you don't care. This doesn't matter. Right here is where it matters. Resistance has now become support. You now take your entry, and the low of the low down here of your previous consolidation is your stop. So here's your stop out, here's your entry, here's your target. I mean, I know that's, overly simplifying a very difficult thing, but when resistance flips to support, that is when a breakout has occurred. We, of course, know statistically most first breakout fails for the most part, but we get our break, we get our retest, we're buyers. That's all we can do. Right or wrong, we pulled the trigger, and that's the part that I think everybody ignores about trading is that we as traders have to swing the bat, and there is only two outcomes. We are right or we are wrong. So we swing the bat and we don't care whether, we don't care what happens. We have our plan and we follow it. That's it. What about the candles that aren't hitting the trend line? We don't care about them. We don't care until we build our plan. All of the other candle noise means nothing to us. We build our plan. So we buy, and then if the stop out hits, we stop out. If the take profit hits, we take profit. That's it. And then, of course, my rule of thumb is if I trim, my stop loss moves up. So that's what I think everybody needs to do. There's nothing more rookie than letting green trades go red. Okay, well, if that is going to do it, everybody, thank you all so much. We ended up with a great turnout. So thank you all. Really great questions tonight. Went a little bit long, but thank you guys for being here on a holiday week. And as always, if you have any questions or anything like that, always shoot me a DM. That's what I'm here for. Like I told you guys, I like to teach. So if you have any questions, feel free to reach out. And if not, we will catch you all tomorrow. Have a great rest of your night. Yep, you as well. You as well. Thank you, everybody. We will talk to you soon. Have a good one.